UBS is buying Credit Suisse in an emergency effort to prevent a banking crisis. This rescue came after Credit Suisse's largest shareholder said it wouldn't provide the bank with any more financing, and the stock immediately fell 25%. Within hours, Credit Suisse had to tap the Swiss National Bank for a $54 billion emergency loan, and eventually the government brokered a deal with UBS to save them. UBS will pay $3.2 billion for the bank. That's a fraction of what Credit Suisse was trading at before the deal. Scott, Credit Suisse has a pretty complicated history. Take us through how this all went so wrong.
It's interesting. When I graduated from UCLA, the most aspirational job was to get into the 2-year analyst program of an investment bank. And there were like good jobs, going to work for Procter & Gamble, going to work for a pharmaceutical company. If you were an athlete or hot, you get to go make more money than anyone, flirting with dentists and selling in some stupid dental supply, or calling on, some, general practitioner and selling in your diabetes medication. So all the hot people and athletes went to work for pharmaceutical companies. But the premier job, the kind of like the, Navy SEALs, like senior year in the fraternity. Hi, I'm Scott and I have a job at Morgan Stanley. It was an investment analyst program. And the 4 premier programs, there's a pecking order. Young people are very brand sensitive because we don't have a sense of ourselves. So we rely on brands, and advertisers love us. Advertisers love young people because people your age are trying to find mates and signals. So they do stupid things. They buy expensive coffee, expensive shoes. They'll spend $400 for Grey Goose versus $300 for Sky Vodka because you think it signals you're a baller and that you're more likely to protect children than if you just ordered Smirnoff. Anyway,
you would never do that.
Oh, I did a lot of it. Oh, my God. I was running around with the worst peacock feathers in the world. It's like, oh, God, tell him to stop. Anyways, yeah, I'm still going through a midlife crisis. That's a bad news, Ed. The good news.
That was my point.
The good news is I think I'll grow out of it in about 30 or 40 years. Anyways, as I sit here in the Michael Jackson suite at the Beverly Hills Hotel. So effectively, what you have here is the best brand in the late 80s and 90s, or one of them, was Credit Suisse First Boston. The 4 premier jobs out of UCLA were Salomon Brothers, which went away. I think it was sold to Citi at some point. Morgan Stanley and Goldman, still around. And then Credit Suisse First Boston. And just to see this company's fall from grace is really dramatic. The last 20 years, this company's been the gang that can't shoot straight. In early 2020, CEO Tejan Tiam resigned amid a spying scandal, spying on a former employee who had moved to UBS. In early 2021, they registered a $10 billion loss after the bankruptcy of fund partner Greensill Capital, and a $6 billion loss after the Archegos, remember them, default. And then the hits kept on coming. In late 2021, they were fined over a corruption scandal in Mozambique. And then most recently, their annual report was delayed. It's just been a series of terrible decisions, bad management, could never get their act together. So finally, this thing was taken out. It was weak. And the Swiss government acted really crisply and said, sorry, you're selling. Yeah, the shareholders are getting wiped out. Fuck you. You've had your chance for 20 or 30 years in what is the best business in the world, banking. And right now you're a problem. Sorry, we're sending you to boarding school. We're going to sell you. And it was sold just for, really just chump change.
Yeah.
At this point, UBS and Credit Suisse had about the same revenue in 2010. By 2019, Credit Suisse sales were 25% less than UBS's. One thing that's interesting to note is in 2008, UBS was bailed out and Credit Suisse was not. Mm-hmm. And think about this. It was just sold for $3 billion. In 2007, Credit Suisse had a market cap of $90 billion. And get this. And so, you're talking about, what is that? That's a destruction of value of about 96%. At the end of 2022, it had $1.4 trillion in assets under management of 50,000 employees. And the merger of Credit Suisse and UBS will create the 4th largest global bank by assets, with $5 trillion in assets under management and 120,000 employees. And they were actually fairly healthy from a liquidity standpoint. Credit Suisse's common equity tier 1 capital ratio is 14.1% at the end of 2022, which is similar to UBS's 14.2%. The common equity tier 1 capital ratio compares a bank's equity capital, that's its stocks, and reserves cash with its risk-weighted assets. So it's basically a ratio of kind of what's liquid versus what potentially is not liquid or more volatile. And to be well capitalized, banks need to have a capital ratio of 6% or better, which just gives you a sense of what a miracle banking is. You actually don't have to be that liquid to be seen as an enduring bank. Credit Suisse had robust capital and liquidity levels, but it didn't have its customers' trust. I mean, this really is an industry run on an intangible emotion. Depositors pulled $173 billion from the bank over the past year and about $11 billion per day last week. And the bank run, again, triggered a liquidity crisis, which triggered insolvency. So this is interesting. And we said this, the wave of contagion is rolling through Europe now. What's interesting is we haven't heard about that many other big banks. So you would argue so far, this might turn out to be sort of an elegant, fairly low cost stress test for the American and European banking system. That'll cost, the government has pledged 209 billion francs, or about $228 billion to backstop the deal. That's about a quarter of Switzerland's GDP and exceeds total European defense spending in 2021. So it's going to be expensive. 118 billion will fall on taxpayers. That's about 13,500 per person in Switzerland. So that's like, I think, about 2 days of work for them. Don't they make billions of dollars in Switzerland? But according to the Swiss finance minister, this is no bailout. This is a commercial solution. And what's interesting here is the people that got wiped out were the Saudis. And that is the Saudi Crown Prince directed Saudi National Bank to invest $1.5 billion in Credit Suisse last year. And that investment gave them a 10% ownership, which implies a $15 billion valuation just a year ago, making it the largest shareholder. And they decided no more. And that's what kind of sent it into Swiss government hands, if you will.
Yeah. I mean, on that point about the Saudis, there are two things I find so strange about this. I mean, the reason this all started was because the stock price collapsed when the chairman of the Saudi National Bank said something. And that is, a Bloomberg reporter asked him, are you going to increase your stake in Credit Suisse? And he said, absolutely not. So that was what caused the downfall of this bank. It was that one statement, which is weird for two reasons. Because one, the largest shareholder brought it all crashing down.
100%.
He's basically responsible for why this happened. But the second stranger thing about this is that statement actually wasn't new. He said the same thing back in October. He said, I have no plans to expand this stake beyond 9.9%. But it's almost like the market was just clinging to any excuse that they could find such that they could bring this bank down. And they ultimately were reacting irrationally. I mean, the information was already out there. We're not going to increase the stake. So to me, this feels like a signal of basically just too much panic, that this is an irrational reaction, that, you know, if they're going to freak out now, they should have been freaking out maybe a few months ago. Do you think that that's a fair assessment? Or maybe do you think, I don't know, Credit Suisse should have gone down?
My dad used to say to me that communication is with the listener. And that is, the same person will have a different reaction to the exact same statement based on what's going on with them.
Yeah.
You know, I was at a conference earlier in the week, and someone got very upset based on his seating arrangement. And of course, it's a dude that would get upset that he wasn't, for whatever reason, didn't see himself as being in the power alley of the seating arrangement, and had the most emotional, inappropriate reaction to the situation. And I said to the person that had to deal with this bullshit, I'm like, this has nothing to do with the seating arrangement. It has nothing to do with the conference. It has nothing to do with you. This is about this individual and what is going on in this person's mind. And you don't know. You don't know why this person is stressed. But I find this is a life lesson. And that is oftentimes when someone gets angry at you or has an outsized irrational reaction to something, just keep in mind, you know, it pays sometimes to be a little bit deaf and also realize this may not be about you. And you don't have to, you know, point out how irrational it is. Sometimes you just want to be supportive and you just want to listen and say, this is more about what's going on with that person right now. Mm-hmm. And stop being such a narcissist. It's not always about you or even the situation. It's about this person is stressed out for probably a lot of good reasons. We all get very stressed out. But if you look at SVB, what happened is everyone was looking for a reason to panic around these banks because of the poor risk management. And with SVB, it got triggered. The panic was triggered by poor communications. The way they explained this capital raise was abysmal, and it spooked everybody. And if the Kingdom of Saudi Arabia, I don't know if it was the Public Investment Fund, if they had said, okay, we know there's real contagion and real insecurity right now, if they had softened that language, if they had said, okay, we've made a huge investment here, we're always available for additional capital when we think it's needed, we have looked at this company's capital ratios, and given that they're as strong as UBS and other banks, we don't feel a need right now to supply additional capital. They could have softened their language. Instead of absolutely not, it felt like executive anger, and it felt like they were sort of saying, this thing is fucked up, we're angry, we've had it.
Yeah.
That is not how you create confidence. And so that tone and that language played a part here. Now, would it have just been kicking the can down the road? Who knows? But when you're in an environment that's all about trust, it's all about emotion, words matter a lot. I would bet in 3 years, when there's a similar situation, we have some sort of large language model, i.e. AI, that says, okay, we have risk of contagion in a financial services company. These are our numbers. This is the situation. What type of phrasing and communication has the lowest likelihood of adding to the contagion, and what type of phrasing and words have the greatest probability of calming the panic?
That's great. Yeah, totally. Yeah, these are basically turning into these giant PR firms, and their job now is just to manage expectations. And one bank that we probably ought to mention that's dealing with this is First Republic. Their stock is down more than 80% this month. They've lost around 70 billion in deposits this year. That's roughly 40% of what they had at the end of 2022. It feels basically identical to Silicon Valley Bank and to Credit Suisse. My original question would have been, do you think this bank will survive? But I feel like maybe a better question is, if you had your deposits in First Republic, would you take them out?
First Republic so far, Ed, is not like SVB. And that is, once the run on SVB started, it went from zero to illiquid or insolvent really fast. First Republic has survived so far. And that is, it's had significant withdrawals, but you had, I believe, the 6 biggest banks put in 30 billion of their own deposits.
Yep.
And it looks like it might be the dam that holds. And that is that this might be the end, or where things turn around or bounce back, because SVB was basically over in 48 hours. And then everyone looked for the next one, and it was Signature. And then everyone looked for the next one and was like, okay, what's a big bank with a lot of assets? It's regional and very focused. Okay, First Republic. Stock goes down, run on the deposits. But it appears, at least for the time being, to be modulating or lessening. So the question is this the next domino, or is this where the virus stops spreading, where it hits a block, where it gets enough capital from big banks, and the depositors go, well, everyone was made whole at SVB. There's no reason to think we wouldn't be made whole. So do we really need to panic? And I wonder, I mean, the optimistic case here is that the people that wanted out got out, and the other people that are still in see some sense of security that, okay, worst case scenario, we get backed, we get backstopped. And also it looks like with additional liquidity from these banks that we may be, we've kind of made it through the volatility or the storm, if you will.
Yeah, but 40% is out. And also all of their clients, most of their client deposits are very high net worth individuals. And this is all a psychological game, right? As you're saying, it's not necessarily about the liquidity. I mean, that's the second order effect. The first effect is people's fear and the narcissism about their own situation. Do you know anyone who banks with First Republic who is freaking out about this? Or if you...
I don't. Yeah. I don't. I mean, it's just, again, you can't find a person whose deposits in a U.S. bank they lost. So the downside here might be some inconvenience or people on Twitter or alarmists screaming. But the data shows that you don't need to panic.
Yeah.
The government on this and any other bank right now is kind of ready just to go, we're seizing the bank, and hello, depositors, you have nothing to worry about.
Yeah.
They're not going to let, it's clear they've said we're not going to let depositors, they've just said in it with all of their body language, with all of their press releases and all of their actions, we're backstopping everyone. And we might have to revisit regulation. We might have to limit or extend the ceiling on FDIC. And then the question becomes, well, is there ever really a limit? But if you just do the math and try to tune out the noise, there really isn't a reason to panic. And so, and also, I do think you have a little bit of an obligation, not an obligation. I think there's something admirable around trying to be mature and a steadying force here.
Yeah.
The question is, with everything you do, there's an overlay of what impact does it have on your family, your neighbors, the environment, and your nation. And if there's very little realistic downside, but to the safety of your deposits, but there is downside to contributing to the panic. And by the way, if you feel insecure about your deposits, you have the rights to take them out. That's good for you. You should be able to do that. But the media and certain individuals adding to the panic here, it's A, not helpful, and B, it's not rational. It's not rational. Try and find an individual anywhere in America that lost their deposits in a regulated bank. Can't find them.